We detected an unusual trade on QXO stock. This company deals in roofing and waterproofing buildings, so let's hope this $1.7 million bet doesn't leak. And so in this video, we'll break down this unusual option activity to figure out whether this wealthy investor is going bullish and buying, expecting the stock to move higher, or bearish and selling, expecting it to drop lower. Because as we all know, the rich have more access to exclusive research and information, sometimes even leaked insider information, giving them an edge to make better, smarter financial decisions. This is how smart money always stays one step ahead, well before the rest of the market catches on. No wonder the rich get richer. And so, to level the playing field, let's dive into the unusual option activity to gain insights from the rich so that our subscribers and members can profit from this deep knowledge too. As we can see here on the options time and sales tape, the most unusual trades happened on September 3rd at 10:40 a.m. at the 54-second mark for these December 19 options at the 22 strike calls and the October 17 options at the 20 strike calls. A quantity of 7,750 contracts were being traded. Now, we need to be very careful with these October 17 options at the 20 strike calls, because when we dive deeper into the option chain and take a closer look at the October 17 options, we can see something very interesting. At the 20 strike calls, there is only 4,000 open contracts at the open interest, which is less than the 7,000 contracts that were just traded. So why didn't the number of open contracts increase? Well, because this wealthy investor was not opening new contracts. Instead, they were closing their existing position here and rolling it out to a later expiration date, to the December 19 options. And they also rolled it up to a higher strike price, to the 22 strike calls, where we now see 8,000 contracts opened, which is more than the 7,000 contracts that were just traded. That tells us this wealthy investor opened new positions here since their contracts were added to the existing open interest. We always take this extra step to verify the data at a deeper level because many other websites and scanners don't. They simply report all high volume unusual trades without filtering out closing trades, which leads to wrong results and losses for those following unusual option activity. And that is why our deeper analysis gives us more winning trades than other websites. And in this case, we confirmed that this wealthy investor closed out of these 20 strike calls that expire October 17 and rolled it into a new trade to a later date and a higher strike price. This means that these December 19 options at the 22 strike calls are the new open trades. And so we can calculate the cost of this new trade by multiplying the total number of contracts by the price per contract, which is 2.30. Keep in mind that options are priced per share, and each options contract controls 100 shares of stock. So to get the dollar value, we multiply by 100 or simply move the decimal 2 places to the right. That means each contract costs $230. Next, we multiply this price by the quantity of contracts traded, 7,750, and this equals a total trade value of approximately $1.7 million for this unusual option activity. But keep in mind, just because a trade is large does not necessarily mean it has a high probability of success. In fact, this one carries more risk than the smaller, more selective trades we share on our website. And so, if you want to get access to the lower risk trades with a higher probability of profit, then go to our website. We'll put a link up here. And if you join the membership through our website instead of YouTube, you'll also receive additional trade alerts by email, because YouTube does not share your email address with us. So make sure to join the membership through our website if you want more opportunities to profit. Keep in mind that our members also get earlier access to trades like this before anyone else, even before we share it with the public. So if you're tired of being late and want more time to act on these opportunities, just head over to our website, where you can see in real time when and which stocks wealthy investors are trading on Wall Street, so that you can have the same opportunities as the rich. Because if the rich get richer, why shouldn't you? With that said, even though this trade carries higher risk, we still took it, but we used position sizing to manage our risk. As you can see here, we also bought these December 19 options at the 22 strike calls and got into the same position here, marked as POS, which stands for our position, and the green color indicates a buy position. Because, based on our deep research across multiple variables and data sets, this wealthy investor bought these 22 strike calls for $230 each, the same price as we saw earlier on the options time and sales tape. And so when we analyze this trade, you can see here on the risk profile graph where the profit or loss shows up here, and the x-axis represents the share price of the stock, which is currently trading over here, and the y-axis represents the amount of profit or loss. Note the zero break-even line over here. And so when the purple line, which represents the current date, and the blue line, which represents the option's expiration date, are trading below this zero break-even line, as the share price goes down, this trade becomes more negative, more loss. And as the share price goes up, this trade becomes more positive, more profitable, because it's going long bullish on QXO stock. We can also confirm that by checking the options Greeks. This trade has a positive delta, which means it's positioned long and bullish. If it was a short bearish trade, we would see a negative delta instead. But keep in mind the risk with this trade. It has a negative theta, which means it loses value over time due to time decay. And that is why you can see here, the purple line drops down lower to the blue line as we approach the option's expiration date. Since these options lose value through time, the break-even on this trade moves higher as time goes on. And so you can see here, even though the call options we bought have a strike price of $22, the stock needs to trade above $24.30 per share for this trade to be profitable at expiration. Because of this added risk, along with other factors, we only took a small position in this trade. We don't invest a lot of capital into these higher risk trades. Instead, we focus most of our capital on lower risk, higher probability of profit trades, the kind of trades we share on our website. We'll put a link to our website here, where you can also learn more strategies to increase your profits. Let us know in the comments. Do you think QXO stock will move higher or drop lower? As always, please like, subscribe, and until next time, let's keep tracking the trades of the rich so everyday investors can profit too. Take care and have a wonderful day.